Let's welcome in Toney. He's Plexo Capital founder and managing partner with me here on set. It's good to see you.
Good to see you.
What do you make of what Bezos said?
I think what he said is spot on. I truly do believe that this is a boom time for AI. But the question becomes, and we talked about this with your colleague John on Overtime, what's the analogy here? Is this, more of a build out of the dark fiber that unfortunately the WorldComs of the world were not able to benefit from because they went bankrupt before, and then Verizon picked up those assets, and that became the backbone that drove growth in the internet for 20 years, right? We're still benefiting from that. So that's the real question. The revenues are real. Right? When you think about the .com companies, this is not a Pets.com 2.0. I mean, we've got over 20 billion in revenues just from Anthropic and OpenAI alone. And then the question just becomes, how far ahead of the demand are they building out that capacity?
So it's real, right? Everybody agrees that it's real. But the other point that he made I thought was interesting, hard to distinguish between the good ideas and the bad ideas.
That's right.
Just because it's real doesn't mean that all this money going towards every idea is going to pay off.
Yeah.
And it's really hard to distinguish as an investor which will be the best bets, and the ones that aren't are going to lose, and they may lose big.
And they may lose big, and I think David Solomon made a similar point earlier, the CEO of Goldman Sachs, because when you have these types of platform shifts and this amount of real that generates a lot of enthusiasm, you have a lot of folks trying to hitch their wagon onto that bandwagon or on that ship. Right? And so what you have are a lot of companies trying to add in AI. And so what you're going to find is that there'll be a lot of losers as well. There will be massive winners. And I think we're going to see one of the greatest accumulations of capital generation within our lifetime over the next 48 months, potentially. The challenge is going to be, to your point, how do you tell what's real?
Well, you have an interesting perspective on trying to make those determinations because you're at the earliest, maybe not the very earliest stages, but close enough of deploying capital in this area. I mean, how are you, as a venture capital guy, trying to figure out what's real and what's not, or what's good and what's bad?
The good news here is that we have the ability to see revenues ramping incredibly in a short period of time. If you think about Anthropic, one of our portfolio companies, it went from 0 to 100 million in 2023. In 24, it went from 100 million to $1 billion. And at the midpoint of this year, it was already about 4.5 or 5 billion. That could be extraordinary if they hit 10 billion this year. That would be a 10x in the first 3 years, which is unheard of once you hit the law of large numbers. Another company where we're an indirect investor through one of our LP investments into a venture capital firm is a company called Cursor. And they are really unique in that they are able to generate computer code through their platform. Cursor has been reported to have been the fastest from 0 to 100 in ARR. I mean, they were able to do that in a little less than 12 months. And it's reported now that their revenue is about 500 million. So, that's an incredible ramp over just a couple of years. So I think that's what's different, is that we're able to see these rapid ramps very quickly. And for those companies like Cursor, they're really sitting on the application layer. So they're benefiting from all of the infrastructure that has been built out by the Anthropics and the infrastructure providers like the hyperscalers and, of course, NVIDIA.